Now to our market monitor. Who likes home builder stocks? The sector closed up for the fifth straight week. That's the longest win streak it's had since August. There you see it, up 16% over the past year. Chris Bertelsen is President and Chief Investment Officer at Aviance Capital Management. Chris, welcome back. Good to have you with us. I hope I pronounced Aviance correctly. Did I?
You did, Tyler. Thank you.
You know, one of the bright spots in the jobs report today was construction hiring, which suggests that the home builder and building sector is moving ahead. It is absolutely consonant with what you're recommending. Let's start with your first pick, D.R. Horton. Why do you like it?
I think D.H. Horton really is terrific. They are mid-level type of home builder. They are great at creating jobs, not only for skilled trades workers, but for semi-skilled as well. And they have inventory which is basically bought back in 2011, 12, and 13, plus the fact they're 35% discount to the market. So they're about as cheap a sector as you can find, breaking up, and D.R. Horton is breaking out from its 2013 old highs, and good timing.
All right, Lennar is next on the list, and you say it's similar to D.R. Horton, but they did something interesting during the financial crisis. They reinvested in their raw commodity, which was land.
Absolutely. That's the one item on a home builder's balance sheet is really their land. So now they've got big built-in profit. They bought WCI here in Florida, and they do a little more rental, but pretty much a carbon copy of Lennar. Again, very cheap, strong balance sheet. You got to like them.
And the last one is sort of a step up in terms of the sort of house price price point at which they do business, and that is Toll Brothers. Why do you like them?
Well, Toll Brothers certainly is for the upper end buyer. They are big in country clubs and high-end communities. You have to like Toll Brothers because that is one of the fastest growing segments. As we see baby boomers retire and those that have earned substantial money over a period of time, they like the Toll Brothers communities and I think therefore attracted to the high end, although a smaller segment of the market.
Right. How do you view the housing market itself right now, Chris? Because, you know, we hear that there's a shortage of first-time buyer or entrance-level types of homes out there, but demand is pretty good from what we've been hearing. What do you see?
Yes, there's no question that the first-time home buyer at the lowest levels sort of sets the market. But I think this is the one area where policy in Washington from both sides of the aisle want to see a public-private partnership if you'll have it. So I think you'll see even incentives and stimulations for what you would consider starter and beginning homes and things at the low end of the price range.
Can you find me a nice place in Sarasota, Chris?
Come on down.
How's it going? Let me ask you a serious question. Do you expect that people will get off the fence and go into the real estate market because interest rates are moving up? Is this going to hurry them up?
There's no question that that's a stimulus. But we fast forget that we had building booms when we had 4% and 5%. Now, I'm not saying we're going to get there in a hurry, but we certainly look like we're marching in that direction.
All right, Chris, I'll see you in Sarasota. Chris Bertelsen, Aviance Capital Management.